Assalamualaikum and hi everyone. Welcome again to my lecture on the new topic of variable costing and marginal costing. So we're going to look at the first learning objective. Okay, you must know to explain how variable costing differs from absorption costing and compute unit product cost under each method. Okay, so there are two names that we can use, either marginal costing or variable costing. Okay, there are two names, okay, marginal costing or variable costing. So there are three simplifying assumptions. Okay, the first is this chapter use actual costing rather than the normal costing approach that was used in the job order costing chapters. If you still remember the topic on job order costing that we covered during the early of the semester. The second assumption, this chapter always use the actual number of units produced as the allocation base for assigning actual fixed manufacturing overhead costs to products. And the third one, this chapter always assumes that the variable manufacturing costs per unit and the total fixed manufacturing overhead costs per period remain constant. Next. So this is the overview, okay, of the variable and absorption costing. Okay, so for the variable costing, the product cost that we will accounted for, including of these three, okay, the direct materials, okay, direct labor, and variable manufacturing overhead. Okay, for under the variable costing, remember only these three items that we will use, okay, to uh, present the product cost. Whereas when we are under the the absorption costing, okay, it also includes these three items: direct materials, direct labor, and variable manufacturing overhead. But under absorption costing, it including the fixed manufacturing overhead as the product cost. And then we look at the period cost under the variable costing. It will include the three items: fixed manufacturing overhead, the variable selling and administrative expense, and the fixed selling and administrative expenses. But under the absorption costing, the period cost only including these two items, the variable selling and the fixed selling administrative expenses. Okay, that's what makes the absorption and variable costing differ. Okay, so you must remember, okay, between the differences on the cost of the under the variable costing and under the absorption costing. Next, okay, we look at the concept check 1. Which method will produce the highest value for work in process and finished goods inventory? So which method? Okay, we know that the absorption costing is including the fixed manufacturing overhead cost, and of course the method that will produce the highest value will be absorption costing. Okay, why? Because again, okay, we look at this explanation here. Absorption costing produce the highest inventory values because it treats fixed manufacturing overhead as a product cost. Okay, because of the fixed manufacturing overhead also include as a product cost. Whereas under the variable costing, fixed manufacturing is expensed as incurred and never becomes as part of the product cost. Unit cost computation part 1. So the company, Harvey Company produced a single product with the following information available. Number of units produced annually 25,000. Okay. And this is all the variable cost, 10 ringgit, $10 for direct materials, labor and variable manufacturing overhead. And for the selling, $3 per unit. And the fixed cost per year as follow: 150,000 for manufacturing overhead and for selling administrative expenses. Next, okay, we look at the unit cost computation under the absorption and variable costing. Okay, so as we know that under the variable, we only accumulate the product cost, including the direct material, direct labor, and variable manufacturing overhead. And the total product cost per unit will be $10. Whereas for the absorption costing, it included the fixed manufacturing overhead. And then we calculated, okay, we find how much the fixed manufacturing overhead per unit of the product. So 150,000 we divided with 25 units. Okay, 25 units is the number of units produced. Okay, 25,000, and we get the $6 per unit for the fixed manufacturing overhead, and the total for absorption costing, the product cost and the absorption costing is 16, and for the variable only 10. Okay, so under absorption costing, all production costs, variable and fixed, are included when determining unit product cost. And then under the variable costing only, okay, only the variable production costs are included in product costs. For the absorption, all production costs, variable and fixed, are included when determining unit product costs. So learning objective 2, now we're going to prepare an income statement using both, okay, of the variable and absorption costing. Of course, the reported income statement that we prepare under the variable and the absorption costing will be different because of the product costs presented or reported are different. Okay, we still use the same situation of the company, Harvey Company. So here the information provided to you is 20,000 unit was sold, okay, at a price of 30 per unit, and there's no beginning inventory, okay, no beginning inventory. And now we're going to prepare the net operating income statement under both absorption and variable costing. So now, variable costing contribution income statement. As I told to you that the product cost under variable 10, okay, so we took the $10 per unit, and then the sales 600,000 because of 20,000 times 30, 600,000, and we find less the variable expense, variable cost of goods sold, and variable selling administrative 60,000, and the total variable expense is 260,000. CM is 340,000, and we take all the fixed costs that we incurred during the year, 150, and also 100,000 for fixed and for fixed selling and administrative expense, and this is the net operating income under variable costing. Okay, the reported income will be 190,000. Next, we're going to look at absorption costing income statement. Okay, so using the same information, now we prepared the income statement under absorption costing. So the sales same 600,000, and the cost of goods sold, and then here you found the differences, okay, because of the product cost per unit and the absorption costing is 16. So then here will be different. The COGS is 320,000 and the gross margin 280. And then we last with the variable and administrative expense 20,000. We do not take the 150,000, right? As we compare using the marginal or variable costing, we took all 150,000 will be here, but under the absorption we just up to the number of units, okay, 20,000 only. So 60,000 and 100,000 here for the administrative expense, and the net operating income is 120,000. So the fixed manufacturing overhead differ in inventory equal to $30,000. How we get it? Okay, because of 5,000 units times 6 per unit. Okay, then we get the difference of 30,000. Okay, learning objective 3. Now we're going to reconcile the difference of the net operating incomes of variable and absorption costing. Okay, so we want to show where the differences is derived. Actually, we know that it comes from the fixed manufacturing overhead cost. So this is the comparing the two methods, okay, under the absorption and variable costing. So this is the variable manufacturing overhead expenses, 200,000, fixed manufacturing overhead expenses, 120, and the total will be 320,000, and it is up to 120,000, and we have here the ending inventory of 30,000. And under the variable costing, the variable manufacturing overhead expenses, 200,000, and the ending inventory is 50,000 for the variable costing. So 120 plus 30,000, it will be same here, 120,000 reported under variable costing, okay, reported under variable costing, which is it presented under period cost, okay, 450,000. And next, we can reconcile the difference between absorption and variable income as follows. So variable, we know that the net operating income reported is 90,000, and then we add with the fixed manufacturing overhead costs, okay, that differ in inventory, 5,000 units times 6, and it will be 30,000, and 90 plus 30, there will be 120,000, and this is the 150,000 is the absorption costing net operating income. Okay, net operating income that reported under absorption costing. So how we get 6 actually, we know we already calculated previous slide, but it should show you again. The fixed manufacturing overhead divided by unit produced, 150,000 divided by 25,000, and the fixed manufacturing overhead cost per unit is 6. Okay. So extended the comparison of income data for the company, okay, using the same company but for the year 2. So for the year 2, unit produced 25,000, units sold 30,000. Okay, so this is the number of units sold during the year 2. Okay, for the year 2, 30,000. And then remember, we have the units beginning inventory that come from the year 1 for 5,000. Okay, and the selling price per unit still same, 30. And this is all the variable costs per unit information, direct material, direct labor, and variable overhead. 10, selling administrative expense, 3. And we have the fixed cost per year, 150,000 for manufacturing overhead, and for selling administrative expense, 100,000. So unit computation cost is still same, okay, because there will be no changes with regard to the cost of direct material, direct labor, and variable manufacturing overhead. So the unit product cost for under the absorption costing 16, and under variable costing 10 is the same as the year 1. Okay. Okay, now we're going to prepare the income statement, okay, for the variable costing. So the variable cost, so still same, okay, 10. Okay, 10 times 30,000, so we get the variable cost of goods sold 3,000. And the variable selling administrative 90,000, 30,000 times 3, and the total variable expense 390, so we get the CM of $510,000. And then we left the fixed expenses, the fixed manufacturing overhead 150. So 150 is reported the all fixed manufacturing overhead under variable costing. But under the absorption, we just reported or we just charged up to the number of the units that related. Okay, and then fixed selling administrative 100,000. So the total fixed cost is 250,000, and the net operating income under variable costing is 260,000. Next, absorption costing. So we prepared the income statement for the absorption costing method. So 16 per unit is the unit product cost under absorption costing. And here the selling administrative expense, we just take up to the number of the units, 30,000, so 90,000. And remember, under the marginal costing, we reported for 150,000. Okay, so then the net operating income is 230,000 under absorption costing. So the fixed manufacturing overhead released from inventory is 30,000. So reconciling the difference, okay, so the part 1 we're going to reconcile. So variable costing, net operating income is 260,000, okay. So this is under variable. And we deduct the fixed manufacturing overhead cost released from inventory, 5,000 units times 6, and it will be 30,000. So we deduct, so the reported is under absorption, costing net operating income is 230,000. So it will be less because of it just up to the amount of that sold during the year. So reconciling the difference. So for the first year, 120,000 under absorption, and the second year 230,000 under absorption, and the total 350. And under the variable, okay, under the variable costing method, the first year 90,000 and the second year 260,000, and the reported, okay, so you can see the total reported income at the end of the period will be same, okay, the same total of 350,000. So this is a summary of the key insight between the two methods of the absorption and variable costing. So relation between the production and sales, the effect on inventory, and the relation between variable and absorption income. Okay, so when the unit produced equal to unit sold, there is no change in inventory, and the relation of absorption and marginal or variable is same. There is no difference in related to the income. Okay, if no change in inventory, unit produced equal to unit sold. But it will be different when the unit produced is greater than unit sold, then there will be increase in inventory. When the increase in inventory, absorption costing will reported more income than the variable costing. Then when the unit produced is less than unit sold, then what will happen to the inventory? Inventory is a decrease. Okay, inventory is a decrease, and then the absorption costing income will reported less than variable costing. Okay, so this is actually the guideline to you when you do your calculation, and you look at this summary to check whether what you did is correct or wrong, right? So variable versus absorption cost. The absorption phase manufacturing cost must be assigned to product to properly match revenue and cost, and variable costing phase manufacturing costs are capacity costs and will be incurred even nothing is produced. Okay, that's the difference of the absorption and variable costing. Alright, so that's all. Okay, what you need to do, okay, what you need to understand under this topic of the variable and absorption costing. Okay, the first thing you must know, the product cost under the absorption and variable costing will be different, and you do the uh, prepare the income statement, and you will find the difference of the income that you reported under absorption and variable costing if there is inventory. Okay, if there is inventory, then you not inventory, the ending inventory, then the absorption variable costing income will be different, and then you reconcile. Third is you know how to reconcile the differences, and you show that if it you prepare the reported income or for the 2 years or 3 years, that at the accumulated of the net income also will be same. Okay, so that's the thing that you must know under this topic of absorption versus marginal costing or variable costing. Okay, so now we come to the end of the topics, and hope you enjoy watching this video. Thank you and bye bye.